It's a huge year for us across our advisory business, across our asset management business. Peter's been out in front, as you noted. He is all over the world.
Right.
We're a global company playing to win.
So I can't imagine how intimidating it is for young Van Nostrand to go in and tell Orszag what the Fed's going to do. What do you tell Peter Orszag the Fed's going to do?
Yeah, you should try working for him, Tom. Look, I think the Fed's job, particularly at this moment in the economic cycle, is about as hard as it's been, certainly in my lifetime.
Finally, it's a tipping point.
Yeah, exactly. We got the two ends of their dual mandate, their focus on stable prices, but also full employment, pulling them in opposite directions. And they're struggling to maintain an easing bias in the market to ease concerns over slowing job growth at the same time that they're really still worried about inflation risks from tariff policy and from broadly tight aggregate demand. They don't like disappointing in the markets, and the market's made its voice very clear that they're likely to cut this week. So I do expect that. But I think they're going to have a lot of messaging around this cut, Tom, that is going to emphasize that they're really at the end of the day not happy about being in aggressive easing mode now because of the inflation risk they're worried about. They're going to push back on that as much as they can, recognizing the fact that the chair is a lame duck and there's going to be new leadership in a couple months.
How do you think about that dynamic of new leadership and how that may impact policy in 26?
Well, it seems clear based on the statements coming out of the administration, the statements coming out of the White House, that whatever individual is chosen to be Fed chair, they're likely to favor structurally more easy policy than we've seen in the past. That means for a given level of job growth, given level of inflation, new leadership is going to favor lower interest rates, and that's what markets are expecting.
Eric Van Nostrand with us right now with Lazard. Headlines, we'll get to Geetha Raghunathan here in a bit. Paramount comes back, and they're going to launch an all-cash tender offer to buy Warner Brothers $30 per share. We'll do that. Is that a surprise, Paul?
A little bit, but not too much. So we'll see it.
We're going to do that with Geetha here. This is the way we roll, folks. We're really happy. This is backstopped by the Ellison family and Redbird Capital. Really happy to have Geetha with us. We'll do it. But right now on the Fed, Eric Van Nostrand, you have credible public service at Treasury. Link Treasury to the Fed and the challenges the Secretary of Treasury will have forward.
So it's a relationship between the Treasury and the Fed that's obviously at a historic inflection point. When I served at Treasury, something we took very seriously was ensuring that the monetary policy conducted by the Fed and the fiscal policy conducted by the Treasury operated independently. We weren't doing that for fun. We were doing that because there's an enormous wealth of academic literature and economic research emphasizing that leads to better growth and inflation outcomes.
I did David Kotak and Kathleen Stephenson's Global Interdependence Center conference last week. I had on stage Frankel Shirakawa and the former central banker of Argentina, and you could feel in the room the angst over Fed independence. How fragile is Fed independence right now?
Certainly the conversation around Fed independence has been as fraught as it's been in my lifetime, in my career. At the same time, markets seem to be betting that things are going to be okay because we haven't seen a big disruption in bond markets. That said, it's clear that markets are paying more attention to these risks than we ever have. One thing I want to point out that sometimes gets lost in the noise, past couple weeks, as we've been saying with more and more confidence that the Fed's going to cut in December. At the same time that's been happening, putting downward pressure on near-term interest rates, long-term interest rates have been going up. That combination is abnormal, and it reflects the market's concern that independence might be, that the way monetary policy operates might be changing in a new regime for the Fed.
So net, how is the economy from your perspective?
Look, the way I think about it broadly, past couple decades, investors, financial markets folks really spent most of their time thinking about demand management. Do we have enough impulse to buy and invest? Do we have enough public policy stimulus to get us out of whatever recessionary hole we're in? This year's been totally different because we're all focused on supply. Right. Is AI going to boost supply to the upside? Are tariffs and U.S. international economic policy going to constrain supply? And that's creating a new puzzle for actors like the Fed that are used to just handling demand.